What does that all mean? All of the macro stuff, all it means is number go up. Liquidity is debasement of currency. Debasement of currency is the driver of crypto prices and all asset prices. Crypto is this incredible, fast, super high velocity, creative destruction cycle. You don't know what's going to be really valuable until the bottom of the cycle. All I do know is capital markets that move that fast, with that much velocity, with that many opportunities, is almost impossible for humans to trade.
Raoul Pal just dropped a bombshell. The global economic cycle is about to change, and it's set to drive huge gains for savvy investors. From massive liquidity injections to a weakening dollar, these events could reshape markets. But is this cycle different from the past? Stay tuned to find out what's coming next and why you might want to act before it's too late.
We're now in the part of the cycle which tends to be what I call the banana singularity, when things start to get really crazy. We've seen that with the Trump coin and whatever. What we're still missing is the massive liquidity injections that should come into the market from central banks and governments. We've got the US will be draining what's known as the Treasury General account, which is their checking account. That will increase liquidity significantly in the US over the next few months until they negotiate the debt ceiling. I think there is a broader deal that's going to get done with the dollar and China. And I think the US is been using the strong dollar as a negotiation point with China. China can't stimulate its broken economy right now until the dollar weakens, because if not, if they stimulate, they'll break the peg against the dollar, which they do not want. They don't want capital flight. So you need the dollar to come down, and then the Chinese can stimulate and help the world economy recover. The US knows this, and it's a tool for everybody. If Chinese economy starts to recover, they'll buy US treasuries. So we're at the really interesting point in the cycle where all the debt has to get refinanced, all the games have to get played, the dollar needs to weaken, rates will come down, and everyone will refinance their debts by adding liquidity. What does that all mean? All of the macro stuff, all it means is number go up. Liquidity is debasement of currency. Debasement of currency is the driver of crypto prices and all asset prices. So it all lies ahead this year. What's interesting is the discussion around when the cycle ends. So a lot of people have PTSD because of the last cycle, and that finished early. It peaked in April, went down 50%, up, made a new high, and then kind of just failed, right? That was driven by the fact that the business cycle, the ISM survey, peaked in March 2021. Why? Because we had that snap crash from COVID and then snap back up, and the business cycle peaked, as did liquidity. So the cycle peaked. So as it went down again, tried to come up again, but kind of failed because there was no follow through because the business cycle had peaked. This time around, the business cycle is actually still below 50, which is the slow growth zone, not recession zone, but slow growth. And all the forward-looking indicators say the US economy and the global economy is about to get a lot stronger. And so we're nowhere near peaking. In fact, we're only just bottoming. So the chances are that we might even go through all the way till Q1 2026. So I think we've got a longer cycle. I think it will almost certainly outperform the last cycle and looks more like 2017 to me, which, guess what, was a Trump cycle. And we entered the Trump cycle last time with tariffs and, oh my God, this and that. Rates were going up and the dollar was going up. Trump came into office and immediately said the dollar's too high. The dollar came lower. China were also near recession. They had to stimulate. They spent the rest of the next 2 years stimulating. And that's what drove the crypto cycle in 2017. So we've got an incredible similar setup to 2017, which you were around for that one. It was bullish as hell. But liquidity is the big daddy here. I got caught out by this in 2017. By about April or May, I sold out of my Bitcoin. I was up 10x because I bought it at 200. It was trading at 2,000. I'm like, it's a pretty good trade. I took the money off the table. It consolidated for a little bit, then it went up another 10x into the end of the year. People can't understand this. It's like if Bitcoin went up 10x from here, and we're at $1 million. Now, I'm not expecting a 10x, but what I'm saying is people did the same thing then. And what happens is you sell out positions, the market corrects, and because liquidity is still the driver, everybody gets forced back into their positions, and that creates this violent end of year move. That's possible. I'm not saying it's definite, but I think of improbabilities, and that's where my head's at. Has Amazon been in a super cycle? Has Microsoft? Yeah. Has Google? Yeah. Have they all had massive correction periods during the downside of the 4-year cycle? Yes, every single time. So what you don't do is you don't get rid of the cyclicality. It's the compounding of returns over time. Now, the only change that I could say is possible, and I think is likely, is that the downside in Bitcoin is not as big as people expect, right? The free money trade is you try and sell out some somewhere near the top, or even if you don't sell out, you're waiting for the dip to buy more. The answer is usually wait till it's down 70%, 75%, start buying, and you make a 20, 30x on that trade every time. My guess is it probably ends up down 40 and not down 75. And that will create a lot of complications for people who are waiting for the big leg lower. And people are going to get caught out, I think, in this cycle. Now, that doesn't mean all of the long tail stuff doesn't go down 90%. Of course it will. But I'm thinking about Bitcoin itself as the anchor price to this whole thing. I kind of am the impression of what changes is the downside is reduced in Bitcoin. Crypto is this incredible, fast, super high velocity, creative destruction cycle. You don't know what's going to be really valuable until the bottom of the cycle. The things that survive become the best trades. Solana, Ethereum. So Ethereum in 2019, absolute killer trade. 2018. Solana in 2022, absolute killer. So what you need to see is when those things go down 95%, everything goes down 95%. So now you've got all of these things at a discount. Your job is to find out what really has network effects, what is really powering an ecosystem. And what you'll find is a bunch of these are kind of dead chains because they were just using money from the foundation to pay for economic activity. But then you looked at Solana and there was a ton of developers building. The community was like focused. Tolly was a good leader. You're like, okay, there's signal here. So I like the cyclicality where you wash out all the bad ideas. People are testing innovation, and that's good, right? A lot of innovation. You do VC, tons of VC things go to zero. But if you get the right ones, they don't. You can make a lot of money out of them. So
Raoul Pal dives deep into the current economic cycle, explaining why we're entering a phase he calls the banana singularity. Central banks are gearing up for huge liquidity injections, with the US draining its Treasury general account. This will flood the market with cash, driving growth and potentially boosting crypto prices. Raoul discusses the US dollar's role in negotiations with China, predicting that a weaker dollar will allow China to stimulate its economy, which will benefit global markets. Unlike the previous cycle, Raoul sees this cycle stretching longer, possibly until 2026. He believes this cycle could outperform the last one, drawing similarities to 2017, where a strong dollar and tariff wars created opportunities. But is the risk worth it? Stick around to hear how you can take advantage of this massive shift.
So this is exactly the trade, and I've been doing it, the Solana or the ETH trade, right? You wait for the washout, everything goes to zero, and you look what has value. What has value? CryptoPunk. They were a fucking gift at about 20 ETH. You've got probably Bored Apes, a bit riskier, but probably going to survive and do well. So PFPs aren't dead. We're going through the Lindy effect and seeing which ones are going to last. And the ones that last are going to become very valuable. So that's the same trade that we got before. It's the same with the art market. We're being given, because these lag in terms of time, the rest of the crypto market, but wealth gets recycled into art NFTs, let's say Xcopy, Beeple, stuff like that.
Yeah.
And we're already seeing capital flowing as people are funneling profits into high status art. The VC model is you or any VC is taking a lot of risk, put some capital in a project that will probably go to zero. Great. Then the unlock comes out, and you want to be able to sell some because you've taken risk and will get rewarded for that. Is there sometimes too large an unlock at one particular point and they don't manage it? Sure. Does the VC play an important role in the space? Without question. Because if not, people can't raise capital. Until you go to the new meme fair launch. What is a fair launch? It just turns us lot into a bunch of VCs and we dump on them. It's the same fucking dumping, just different people. So it's utter bullshit that it makes a better market. It just means that somebody else gets the ability to dump. There's no difference. The issue is with a VC, and again, this is really broad strokes because there's all sorts of players, all sorts of different things. Let's say it's a larger layer one or whatever it is, or a DeFi project, and VCs have been involved. They've vetted it, they've looked at it, they've tried to choose something that should have a higher market cap. What you're doing with the pump.fun is you are so early, there's no business model, there's nothing, just an idea. So they're just very different things. So I like them both and hate them both. But this is the velocity of capital thing that happens in these markets is you can make a lot of money, destroy a lot of money, or make a lot of money and then destroy it really quick. And that's the game that people like. They like the volatility and the adrenaline. You know, it's not a slow burn market in these things. It is, it's just high velocity of capital and it's extremely volatile. Really interesting one was the Trump coin. Really interesting because the speed of capital formation was probably unprecedented in the history of the world, right? You coalesced $75 billion of value in about half a day.
It's insane.
Okay, so forget all of the what's fair, what's not. The signal was that. The signal is if you get the right team with the right thing that the market likes, you can coalesce capital at an unprecedented rate. Now, this was tested in the last cycle, and it was something called the Constitution DAO. A bunch of people went to buy the US Constitution, and in one weekend they raised whatever it was, $20 million, but Ken Griffin ended up outbidding them because he didn't want them to have it.
And then they refunded
That was the first signal. When that happened, I said, this is the future. How fast you can get a commonality of interest to pull capital to do something. Now, the Constitution DAO had no speculative value in it. So when you create a speculative asset to coalesce capital, it can go to 75 billion. Now, the problem is a lot of these valuations are unsustainable. But look, the signal from this is very important because in the end, there will be no IPO market. There will be no public market for stocks. Why should there be, right? This is the people's IPO. It goes from VC through to IPO all in one day. Well, it went from VC to full IPO valuation in half a night.
Yeah.
This thing is showing us, not this cycle, we'll test it this cycle. ICOs were doing this as well, right? This is going to show us what the future capital markets are going to be like. And all I do know is capital markets that move that fast, with that much velocity, with that many opportunities, is almost impossible for humans to trade.
As Raoul Pal points out, liquidity is the engine behind market moves, and we're just getting started. Will the dollars decline, fuel the next crypto boom? Only time will tell, but Raoul's insights make it clear that there are massive opportunities ahead. Make sure to subscribe for more updates on this evolving market. Until next time,